Good morning, everyone, or I should say good afternoon for some. Thank you for joining AKORA Resources webinar this morning. I'll soon hand over to the Managing Director, Paul Bibby, who will review the quarterly that's just been and also share some of the exciting plans that are coming ahead for the rest of the year and beyond. At the conclusion of Paul's presentation, I'll be hosting a question and answer session where you'll be able to raise questions and Paul will answer them for you. Any questions we don't get to today, I'll be certainly looking to reply to those questions by the end of the week. So without any further ado, I'll now pass over to Paul to walk through the quarterly review.
Thanks, Gareth, and thanks everyone for joining. Looking at those that are attending, we've got people on most continents, which is pretty nice for this time of day. AKORA Resources, iron ore for tomorrow's steel making. The focus, of course, is on the DSO in the weathered zone and how that's shaping up for the PFS, which will be reported on in the first quarter of next year, and then move, to the future, a high-grade, low-impurity concentrate for the future steel making. I think we all understand the disclaimers and the forward-looking statements. As you all know, our focus is on Bekisopa project in south-central Madagascar. We also have the other tenements on the east coast, and the tenement that we started doing some exploratory drilling on this year, Satrikala, 40 kilometres south of our Bekisopa project. From these projects, we have the potential to develop high-grade iron ore projects initially from Bekisopa, but from those other projects into the future. Firstly, I want to just talk a bit about Madagascar. Madagascar is a mineral-rich country, as shown here on this photo, which has a large number of mines in orange, so existing mines and operations, and in green, exploration projects. There are projects there from some of the major companies, Rio Tinto in the south with their mineral sands, been there for some 20 years, Sumitomo and the Koreans in the east coast of Madagascar with their nickel laterite project. Those two projects combined have invested approaching probably $10 billion over the last 10 or more years. In the south, below where Bekisopa is the Base Resources project, which looks to be gaining a good head of steam and potentially is coming into development next year. Next Source Graphite project, producing graphite over the last 12 months, a very good quality project there. The Gold Sands Graphite project, the Gondwana Uranium project, where the Romanians have come into the country in the last 6 to 12 months, and they're developing and doing a lot of environmental work to progress that uranium project. So a lot's happening in the last 12 months as the Madagascan government has taken some very positive steps to support the mining industry. In the first week of September this year, the Madagascan Mines Minister, Dr. Oliveira, visited Perth and presented at the Africa Down Under conference. And the next slides are a couple of his slides, which highlights the progress that have been made and how the government, with the help of the World Bank, is ensuring that mining has a strong place going forward in Madagascar. The objectives of the new mining code, which was put into law in July of 2023, aligns the Madagascan mining legislation with the best international practices. And from our review of the mining code, that is the case. They want to promote equitable and environmental friendly mining. And one of the main objectives is to ensure that people have good jobs, have skills, and improve their standard of living. And that is the focus of the World Bank and the European Communities funds with Madagascan government and the Mines Minister and the new mining code. And as the Mines Minister said at his talk in Perth, their objective over the next 5 years is to have 20 large and middle-scale mining projects approved and operational. And there's already, as I mentioned, 4 or 5 of those already happening. In August of 2023, they renewed the Rio Tinto mineral sands mining project for another 25 years, which gives everyone confidence, I believe, that the mining activities in Madagascar are continuing and getting stronger. And the implementation rules for the mining code, as the Mines Minister said in that first week of September, were recently adopted. And Madagascar is now truly back. This slide here is another slide from the Mines Minister's presentation at Africa Down Under. On the left, it's a busy slide. We don't need to look at that now, but it shows the number of exploration projects happening across Madagascar, including Beki Sopa being marked there in south central Madagascar. But the interesting part of this slide and his presentation was that he highlighted the near future projects. And the near future projects are projects they believe will come into operation in the coming years, the next 2 to 4 years. Base resources, graphite with NextSource, which is already operating, some other graphite projects potentially, and iron ore with AKORA Resources. So our project was named in that presentation. I was at Africa Down Under, as you can imagine, and presented following the Mines Minister. And I also brought our chairman, Graham Hunt, along. And we had 2 meetings with the Mines Minister and his entourage, some 3 hours in total. And Graham was very impressed with the calibre of Dr. Oliveira as a Mines Minister, and also very encouraged by what has been achieved in the past 12 months and what their objectives are in the next 12 months, particularly with him focusing and paying attention to AKORA Resources project. Following that conference at the start of September, I was asked to come back to Madagascar in the last week of September and to continue the engagement with the Mines Minister to look at how we can progress AKORA's project and get that into operation in the coming years. So very good engagement, encouraging discussions, and I believe they're going to be ongoing in the coming months. Also, the communities from our recent visits in August at Tana Marina and Beki Sopa, the communities there are very supportive of the work that we've done to date at the community level, providing skills training, education and medical support and the like, and they want us to be there and operating. So we're getting good support from the local communities as well as from the central government. As you all recall, from our first 2 drilling programs, we delivered our maiden mineral resource, just under 200 million tonnes inferred JORC resource, from drilling on just 20% of the 6-kilometre strike at Beki Sopa. The 3 drilling programs since then have all been what we call infill drilling programs, shallow drilling, focusing on the red earth that you can see where the drill rig is there in the photo on the right-hand side, to identify more tonnes of DSO in that weathered zone to add mine life to the scoping study and ensure that the PFS has very good economics and a strong mine life going forward. One of the good things to notice in that photograph is the countryside around Beki Sopa. It's very remote. It's undulating countryside, and free of people, animals, and to some extent vegetation, which is what our environmental study has been showing, that there seems to be a lack of vegetation of significance and animals, and we hope that continues to be the case as we further those environmental studies. Our stage 1 development at Beki Sopa, as I've mentioned, is focusing on direct ship iron ore, conventional lump and fines iron ore, grading 60% or better, to feed into the blast furnaces for steel making, the current technology. The scoping study identified that from a 2 million tonne per annum production and shipment of iron ore, lump and fines to the blast furnaces, we expect that to deliver $100 million per annum pre-tax for each year at 2 million tonne production rate, and that was using $100 benchmark price. So that is a very solid financials for the scoping study. Then once the DSO is mined, and we look to see around 8 years of mining of the DSO from what we've forecast with the drilling, we move to produce a high grade, very low impurity, premium priced 68+% iron concentrate for high-grade pellets for the blast furnace, or more importantly, for direct reduced iron pellets for the electric arc furnace green steel making technology. Technology that's designed to reduce the CO2 emissions from the conventional blast furnace steel making process. So as I mentioned, stage one is all about producing lump and fines, as you can see in that photograph there on the left-hand side. The PFS, which has been our focus for this year, is on track for completion in early 2025. Our General Manager Development, Jason Whittle, is presently with the engineers overseas for the next 2 weeks, collating and combining and ensuring that the work is all coming together so we can report on that in early next year. And as of this morning, Jason's feedback was, while it's busy, things are coming together nicely. In the September quarter, we had a number of announcements, and we had an announcement on the geotech drilling. The geotech drilling confirmed that the weathered zone lump and fines iron ore is rippable, which means it doesn't need drill and blast to break up the ground. It's weathered, so therefore it's already fractured and friable. No drill and blast confirms low-cost mining practices, as was what we identified in the scoping study. We also drilled 4 hydrogeological drilling holes to identify where the water table was across the north, centre and southern parts of our 6-kilometre strike at Becky Soper. Those holes identified water at 30 and 50 metres below surface with very good flow rates, recharge capacity it's called, and more than sufficient water for the DSO processing activities and potentially for community environmental needs, but also looking forward to the future processing beyond the DSO practices. We also did a series of metallurgical test work on the iron ore products. The bond work index was 3 to 4 kilowatt hours per tonne, which is rated as very easy. So very easy means that it's below the industry norm, and the bond work index means that the crushing and grinding in terms of operating costs are going to be at the lower end of the scale, which is also good. We also did work on abrasive index. It was 0.01 to 0.3. That was rated as non-abrasive to slightly abrasive. Magnetite ores, like what we have, are generally around 0.2. So we seem to be less abrasive than general for magnetite ores. Again, that all plays into low maintenance and low operating costs for the process at Becky Soper for producing DSO. All very encouraging. And to date, I think it's fair to say that the PFS work we've done on the different parcels of work are continuing to confirm the scoping study numbers that we released in November of last year. In the past quarter, we also completed the road survey work between Becky Soper and Satricala, the green dashed line on the left-hand image. In the scoping study, we forecast there to be about 50 kilometres of roads to be built or upgraded. The road survey has confirmed that about 25 to 30 kilometres of new road has to be created from Becky Soper across the Zumandao River, and then more road than we thought, which is good, that needs to be upgraded past the Satricala project heading towards Becky Soper. That's the image in the top right-hand corner of that 4-wheel drive track. To our surprise and pleasingly, that track continued well past Satricala and towards Becky Soper, which means that as we go forward with the project, we don't have to do any detailed work in terms of land acquisition for creating the road. We need the approvals and the permits to upgrade that section of the road. So again, all encouraging. A key part of the road survey work was to look at a suitable crossing of the Zumandao River. At the moment, where we cross coming in from the northern side of the Becky Soper project, the river crossing is about 200 metres wide, sandy ground, and when it floods, it's not crossable. Pleasingly, they've found a location between Becky Soper and Satricala, which is a large rock flat area where the river passes through. So potential to build a sensible, modest cost causeway structure to cross that river in the wet season. So as we've said, one of the good things about the Becky-Soper project, it's high grade DSO at surface. The outcrop there in the left-hand side, the lump and fines in the weathered zone. We're seeing good grades there. And in the lump product in particular, we're seeing grades of 63 and 64% from the work that we've been doing, and the fines, more around the 60%. The next two slides I'll go through quickly, but it's just to remind you of the drilling work that's been done over the 4 years since we listed in December of 2020. A lot's happened in those 4 years. What we have, and this is a cross section in the north on the right hand side, at surface in the weathered zone, we're seeing high grade DSO. In this section here, average intercepts of 6 meters at 64% iron. And then below that, dipping to the west, a continuous, wide, fresh rock magnetite iron ore deposit, where we're seeing grades of around 38% and very wide intercepts, 67 meters and the like. And in the north, we've drilled that down to 300 meters. So there's a long life project there beyond the DSO into that fresh rock, which can be upgraded to a high grade concentrate, better than 68, 70% iron with low impurities for the future of steel making. In the south, the ore body doesn't dip as deeply. It's more folded and is becoming flatter. But on the eastern and western side of that southern zone, which is several kilometres wide, again, we're seeing high-grade DSO in that weathered zone, which from the geotech work reported on in the last quarter is rippable, therefore low-cost mining. And then below that, we can continue to see extensive sections of fresh magnetite iron ore suitable for upgrading at a coarse grind size of 75 microns, coarser than the industry practices and expectations, to produce a very clean, high-grade iron ore concentrate. Just refreshing our memories with the scoping study financials, building to 2 million tonne production, using $100 iron ore price, mine life of 5 years. I've just approved in the last week, as Jason's overseas with the engineers, to do the next round of mineral resource estimates to add more mine life, more DSO tonnes into the PFS study to ensure that the project financials are robust and continue to deliver good cash flow from an increased mine life in that PFS study. The important number to note here is not just that the payback is around 2 years, but the cash costs, the cost of getting it from mine, hauled down the road to the port, is $42 a tonne. So that is an extremely good margin compared to where the current iron ore price is that we've used, which is $100 a tonne in the studies. And the project can be robust going forward, even if the price does drop down to $80 or the like. Our cash costs are such that that will still be a profitable DSO project going forward. This slide here, which I've only incorporated into my last couple of investor presentations, shows the iron ore price over the last sort of 9 to 10 years. And what it shows is that the average iron ore price for the last 9 years has been $100 a tonne, the black dashed line through the green variability of the iron ore price. And actually in recent years, the price has been very stable at around about $115, $118. And the X at the end of the iron ore price trend is the current price, which is $104 a tonne. So slightly higher than our $100 that we've used for the scoping study. Also in the last quarter, we reported on the initial exploratory drilling at Satricala. Satricala, where we've got the 10-kilometre strike magnetic anomaly, as you can see there on the right-hand side. We stopped after 5 holes because the drill core was very consistent across all the 5 holes. Mineralisation in intercepts averaging around 75 metres in those 5 100-metre holes. And in a number of the holes, when we drilled to 100 metres, we were still in mineralisation. So showing that these magnetic anomalies, the red lines heading north-south in that image, continue at some depth below surface. The assays are with ALS in Perth. They're expected later this month and will and will be reported on either late this month or early in December. And it's going to be interesting to see what the assays are. From what we saw of the drill core looked similar to the Becky Soper fresh rock. So the upgradable material for producing high-grade iron ore concentrate, rather than the DSO, which we see in the weathered zone first and then the fresh rock below that. One of the good things about Madagascar, it's close to the Asian iron ore and steel industry, whether that's China, Japan, Korea, Vietnam, but importantly, very close to India. And India is one of the growing economies in the world. Its steel industry last year produced 130 million tonnes of iron and steel, and by 2030 is predicted to produce 250 million tonnes of iron and steel, predominantly using conventional blast furnace technology, and they are looking for DSO units to feed those blast furnaces, and Madagascar is well placed for that. Also, we've got the Middle East, the other green dot, pretty much directly north of Madagascar there. There are steel making operations in most of those Arab Emirates, 5 million tonnes per annum type steel operations, using the natural gas to fuel the electric arc furnaces and produce DRI pellets now, and making steel through that process. So as we get through the DSO, I see that in the future, the fresh rock, which will be made into a high-grade, clean concentrate, will be sought after, at least in the Middle East, but also elsewhere in the world, as they decarbonise their steel-making technology and are looking for high-grade, low-impurity feed materials. We've got a good board. We've introduced these people previously. Graham Hunt is our chairman. He's been with us now about 8 months, and his influence and his knowledge from BHP, initially in the steelworks and then in the iron ore industry, where he was president for 5 years, has been very beneficial for us as a board in setting our direction and strategy, but also bringing challenges through his connections and interest from his connections to the company. Matthew Gill, mining engineer, he's developed a number of mining projects over his career and brings great study knowledge, but also how to implement projects and get them up and running. Shane's our CFO, and Jason, who I've mentioned earlier, General Manager Development, who's been doing a terrific job in collating, combining, pushing, and ensuring that the PFS items of work are all going to be finished this year to be reported on next year. And as I mentioned previously, looking at some of the numbers that have been reported in the last quarter, things are shaping up to confirm that the scoping study is a good reference point for the robustness of the project in terms of production, but also financials going forward. So in summary, AKORA's Becky Soper project is a compelling investment case when you look at the scoping study numbers and how the PFS numbers are confirming that. We've got the DSO startup, a low capex $55 million project that's got a good margin, cost of 42 against a $105, $104 price today, and strong cash flows going forward. And then as the DSO is mined and delivered to customers, we've got the very long life fresh rock, which can be upgraded to produce a premium grade, low impurity iron concentrate for making into DRI pellets for the future of the steelmaking industry. So thanks for listening, and I'm more than happy to answer your questions.
Thank you for that presentation, Paul. I have received a number of questions in the lead up to the webinar this week. The first question, given the recent engagement with the Madagascar government, how do you rate Madagascar as a mining jurisdiction?
I think there's two parts to that answer. Firstly, we've seen a number of new players come into Madagascar in the last 12 months as the mining code was approved. The Romanians looking at uranium, Chinese at graphite. Next Source has actually come into production in the last 12 months producing graphite and shipping that out of Madagascar. So that's positive signs that companies are coming to the country. In terms of our interaction, the engagement has been always encouraging in the 4 or 5 times that I've met with the Mines Minister. But with the meeting at Africa Down Under in September, and with Graham being there, we were both very encouraged by where the mining code was at, the implementation procedures, and the enthusiasm from the Mines Minister to get projects through the exploration stage into operation. So the engagement is good, and the mining code is internationally competitive. There's nothing there that's alarming. So yeah, Madagascar, as the Mines Minister said, they're back and they're open for business, and they want professional companies like ourselves in there and developing and progressing exploration projects.
Next question. Why are you so bullish on high-grade iron ore?
Well, high-grade iron ore is always going to be sought after by the customers because it ensures that their iron and steel making practices are the best, their emissions are the lowest, and it means that a product from Madagascar is going to be sought after. It also means that you're not going to get penalties. You're going to get the benchmark price or better for the product that you're going to ship. And it also differentiates you from a number of the other projects which may not be able to, in the case of DSO, ship 60, 62% or better iron ore products for the conventional steel making. But importantly, as we get into the fresh, one of the things that we're learning from the research we're doing and the information that we're being presented with from other steelmaking companies in particular is they need the high grade 68 to 70% iron. The best you can do is 72%. And they need low impurities because that ensures they get good productivity and good quality steel through that green steel making technology. And AKORA is one of the few projects that can deliver that high grade, low impurity. So I'm keen to keep pushing that aspect of our Becky Soper project.
What is the status of off-takers taking a closer look at Becky Soper?
They're still involved. It's amazing. It's frustrating for myself and the board that we haven't been able to announce something to date. And I don't think it's any different to the market that we're in generally outside of business. People are taking longer to make their decisions. They know that there isn't necessarily pressure on them to make a decision in a hurry, and they're taking their time. So in some ways, that's good. It means that when the organisation that does put a term sheet with us and that we do sign off, it's been given a lot of due diligence. So discussions are ongoing, and I like to think that, I shouldn't say that, I should say I know that with the engagement that the Madagascan government's given us with us in the last months, that has actually encouraged them to do more work in the data room, have more discussions with us with the potential of delivering an outcome from one of those strategic investors, particularly an off-taker, I believe.
When would you expect to achieve first production?
Well, the plan that the board has in front of us, and you know that we've only been going it for 4 years, and we've been drilling, and we've been pretty in a bit of a hurry. The plan we have in front of us is to deliver iron ore DSO from Becky Soper, first shipments in the first half of 2027. So that means that production from the mine site has to happen at the end of 2026 before the wet season, be stockpiled. That's allowing time for the port infrastructure and activities there to be well and truly in place following the final investment decision, which would need to happen at the end of 2025. So, 12, 13 months away. So in terms of first production, the pressure we're putting on ourselves is to deliver a shipment in the second quarter of 2027.
Okay. Now, you've perhaps answered this question throughout the presentation. The question was, how has ex-BHP Iron Ore President Graham Hunt settled in? I suppose the extension of that question, what's it been like working with this past year?
Oh, look, to have someone of his caliber on our board is tremendous. Similarly with Matt. Matt's experience in operations and delivering projects is valuable as we're doing the PFS. Graham brings knowledge from the steel industry, but also at the iron ore industry, from exploration through to delivering product and with customers. So it's been extremely good. He does put us on the right track. He's pushing us because he doesn't have to stop and think about the exploration, the geology, the metallurgical aspects of the project. He understands those straight off, and then he's saying, okay, this is where we've got to start heading. Also, during October, he hosted 2 investor lunches in Melbourne. We had 35 people attend those 2 lunches, and I was certainly challenged with the questions because we had senior representatives of Rio Tinto and BHP, senior executives, board members, but also people from other industries and that have had experience in the mining industry. So it was a really good challenge for our thinking and our strategy on the project. So it's been tremendous. No, he's been a real asset, and we're fortunate to have someone of his experience and caliber as our chairman.
There's just one question come through. The PFS expected in the first quarter next year. That's you're feeling pretty confident about that target?
Very much so, Gareth and listeners. Thank you. I hope I mentioned that Jason, our General Manager of Development, he's overseas right now with the engineers for 2 weeks. That is all about ensuring that the parcels of work are being completed and compiled and started to be reported on. And if there is any areas that we have not managed to progress as well, to get those progressed, to ensure that the work is all completed by Christmas of this year, 2024, so that we can report to the shareholders, February, March of 2025. And we need to do that if we're going to meet the production objectives that we have and shipment objectives that we have. The element of work that we're doing more work on than we initially thought we would in the PFS is on the port side of things. And we still believe that that'll all be finished by Christmas, if not January, so that we can report on completion of the PFS in March of next year.
Well, certainly I appreciate it. It's been all hands on deck from having spoken to you over the last quarter, particularly with the visits to Madagascar and the face-to-face meetings and certainly walking the ground. But look, that brings to a close the end of our webinar, Paul. Thanks very much for your time this morning and this afternoon for some. The recording of the webinar will be posted to the AKORA website very shortly, if not by the weekend, definitely by Monday. So without further ado, I'll close the meeting and thanks for your participation.
Thanks, Gareth. Thanks to everybody. All the best.